Hi there, Internet. It is Friday, and that means one thing: it is time for my weekly update. It's Good Friday, so happy Easter to all of you that celebrate it. It was down to the wire at the end of March, but we closed that March in green. By the way, I know that the weekly stats are important to some people. To me, they're effectively vanity metrics. My returns, I measure them on much bigger periods, years, half decades, or decades. So it's nice to finish a month in green, but it's not essential, and I completely expect that there will be some months that we don't finish in green. Looking at the numbers, I've got a website, by the way, gettingrich.slowly.org. It will evolve over time, but you can quickly see the stats over here on the right-hand side. And I've also shown you the kind of return you might have expected if you copied me with $10,000 in a particular time frame. So if you copied me with $10,000 6 years ago, you would now have $75,000, which is pretty great. And if I'm able to continue hitting my targets, then by 2021, your $10,000 that you had invested 6 years ago would now be worth would be then worth $288,000. Okay, enough about stats. Let's take a look at what has happened in the past week. So lots of markets will be closed today in observance of Good Friday. Almost all. But Monday is a slightly different story. So the UK and I think parts of Europe might be closed for Monday, but the US will definitely be open. Another stimulus bill is going through the process in the US government. This is a $2.3 trillion infrastructure bill. It covers many different areas. You can see a breakdown of the plans if you Google for it. It seems like a really cool thing to do. It's not just about changing infrastructure and decarbonizing the US. It also has a lot of money in there to help with social issues within the US. Something to note though is that it would include raising the corporate tax rate, but it would cover the cost of spending that would be spent as part of this bill. But the increase in tax rates would be phased in over, I can't remember the exact period, but it's more than a decade. So the markets have taken this quite optimistically. Because the tax increases are pushed out quite a lot, it hasn't scared the markets very much. I see this as being beneficial to a number of different areas within the US market, some of which we are already involved in. So US 10-year yields and other yields have been dropping off. So the highs were near 1.75, and now they're down to 1.672. Again, rising yields are not necessarily a problem. It's the rate at which they rise. But I do follow quite a few bond experts in various different ways, their newsletters and Twitter and their whatever else, their blog posts. And some of them are expecting that bond yields will drop all the way down to about 1.2. Tech loves this because it signals that inflation might rise slower than anticipated, and therefore interest rates rise slower than they had been pricing in earlier. And this means that growth stocks would still benefit from lots of cheap money, which is essential to any company that's growing fast. They live on a lot of debt. So we've seen the Nasdaq rise off of the back of this, and I expect this trend to kind of continue, although I don't know if money will find its way back into more speculative technology stocks to the same degree that it was prior to the sell-off that we've seen from the middle of Feb. Just to remind everyone, so these are the yields on the bonds, and as the yields drop, this is a different bond, by the way. I think these are the 20-year bonds, but you can see as yields drop, prices go up. So if you do think that bond yields are going to continue dropping, you might want to buy some treasury ones. These are TLT on eToro. That's not an endorsement in any way. I don't own any of these bonds. I think we can make better returns elsewhere. Right. House prices are rising immensely in many first world countries. Lots of people are borrowing. The cost of borrowing is very low. When there's more demand, prices rise. So we are seeing mortgage rates are rising to meet this demand, but so are house prices. This could spell some danger in the mid-term future. So you can imagine if lots of people are taking out loans because the interest rates are super low, and maybe they're stretching themselves and buying houses that they couldn't afford if the rates were slightly higher. When rates do increase, those people are going to default. So there's a danger now that people are buying houses they can't really afford because they aren't factoring in the future rate rises, and they could happen quite quickly over the next 5 or 10 years. So it's something to keep an eye on, but it's not something for the short term. Just, keep it in the back of your head. AstraZeneca is in the limelight once again. So was it a week or 2 weeks ago that many European countries paused the rollout of AstraZeneca's vaccine because there were concerns about blood clotting. There was a company that found a way to treat the blood clots when they did happen, but then the reviews that came back at that point in time said that actually there isn't too much of a major issue. But now this has reared its head again. We're seeing headlines in the UK and Germany has now restricted vaccine usage in particular age groups. So this could spell some trouble for AstraZeneca as well as the vaccine rollout, which would impact recovery stocks, delaying their recovery a bit more. Some countries are also looking at have already tightened up their lockdowns. I think France I saw the headline about France yesterday. They've really tightened this up quite a lot. Again, this is all impacting the world. I think everyone's super tired of being in lockdown. It's affecting mental health everywhere. But also it's going to affect those businesses that really need the world to open up. All those restaurants and travel companies, etc., that are struggling to survive. So we could see some trouble there. The Suez Canal is unblocked. It's quite a monumental effort that went into unblocking the Suez Canal, a monumental effort that went into creating many hilarious memes for our entertainment. But now the big boat has been moved, but there's a backlog of ships, and this backlog, there's going to be all kinds of impacts. It's not just the backlog. Some ships were rerouted. They have taken longer paths, which means they'll be delayed, and also it's more expensive to go the long way around. So there'll be whisperings of this. It'll start fading into the background, but there'll be whisperings of the impact of this. I'm wondering if this has highlighted a bottleneck that might need some attention in the future, maybe as part of these infrastructure plans that many countries have undertaken, but we'll see. Okay, last week I did talk about this a little bit. So this is a family office that had many billions of dollars under its care. For some reason, big banks decided to lend a lot of money to a man who'd been caught out for some fraudulent activity previously. Why wouldn't you lend someone that was bust for insider trading tens of billions of dollars? I don't know. So some of the banks that did lend this family office money have said that it'll impact profits. The overall amount for these big banks, I don't think, is a huge problem. There were concerns that this was a symptom of a bigger problem, but nothing has really emerged through this week. So at beginning, I would say Monday through Wednesday, markets were a little cautious in their trading, but as it emerged that the impact seems to have been contained in the tail end of last week, that the risk on attitude has returned. Cryptos are on a tear again. So Ethereum This candle, by the way, runs to about here, just over $2,000. Ethereum is very close to hitting its all-time high, as well as Bitcoin. There have been lots of good news for both of those cryptos, and this has meant that a lot of altcoins, so Rune is one that I have in my bags outside of eToro. A lot of altcoins have, done incredibly well over the past quarter. I think that if these cryptos in particular, if the two head honchos are able to break through and sustain a level amongst their recent all-time highs, we might be in for another bull run. Chinese indexes. So a lot of you know how much I love Chinese tech, in particular Chinese tech stocks. Some of those companies that are listed in the US, they've had a very hard time. So this index, the CQQQ, which you can read more about over here, is a pretty good representation of what's been happening to Chinese technology stocks. So this is, the middle of February, and just tanked and sold off, I guess, what's that, over 20%. So entered a bear market. Let me refresh this. It entered a bear market. So a lot of our Chinese tech, we've been buying for months, but some of them were bought kind of in this range, and so this has affected our portfolio. This was a large part of what caused the red in our portfolio through March, but the various indexes and various stocks seem to have found a bottom and now are rebounding. I'm incredibly bullish on the Chinese companies that I own. They were cheap, a lot of them were cheap even at this level when CQQ was at its highest. So now they are just bargain buys at the levels that they are at the moment. So as the recovery continues and it's more confirmed, I might start adding more to my positions. I do have some fairly large positions, so I need to manage my risk accordingly. So we'll see. All right. So what about the coming week? I think the coming week and the next few weeks or so are gonna be following the same themes that they were through the past month and a half. So those will be bond yields, although I think those are going to drop and that news will fade into the background. Inflation, the next stimulus bill that the US is trying to get through government, it's going to take a while to get it through. It's not through yet. Some money is going to return to tech stocks, but I don't think in the same proportions. So if we jump over here, you can see through the last week, some Chinese stocks have done pretty well. But you can also see some of the more risky players have seen some money return to them. But my guess would be that it would be the less risky players that are going to be the major beneficiaries of a slight rotation back into tech. In addition to this, we are now very close to earnings. And you can see that the big banks always kick off US earnings. They will start reporting earnings quite soon. And then hot on their tails, we'll see the rest of the US companies reporting earnings. So the focus is going to be there. All right, I need to go and hunt for some Easter eggs. So that's it for this week, and I will talk to you next week. I hope you have a great long weekend.